Hello, fellow traders. 'Tis I, the Rumpled One. Tuesday, August 14th, the year 2018. Let's talk trading, trade details. I received an email, or maybe it was a comment somewhere, that they had questions about some of the trades like Rat Zone, Wick Zone. They said, where are the rules? So I'm thinking maybe this week I'll dig back down into it because it's so obvious to me since I came up with it, and I thought I'd explained it elsewhere. But for new people, it's kind of frustrating trying to find all these things. Okay, first rule: money and risk management. Right? Risk equals $1% you are willing to lose per trade, and the calculation is you determine what the risk is. Then you say, okay, well, I want my stop loss to be this. So if you've got this risk, you'll have this. This is your position size. Or if you know what position size you like to trade, you know your risk, then the stop loss is pretty much going to be constant, right? So let's just say, if you've got a position size of 1 unit, and so maybe the stop loss always comes out to 10 pips. Okay, into it. And we're looking at the monthly chart. We can see the yen has bounced about 73 pips off the bottom. And you can see here from the previous month, we've got the open, we've got the low. Right here is the lower wick zone. So for wick zone traders, you trade out of the wick zone, not into it, but out of it. Price needs to come into the wick zone, then you trade either side of the exit. So for example, here, price was coming down into the zone. So you're taking the breakout here to the bottom, 110.274. Then price came around, you would go long at 110.565. And you see here in both trades, there's profit to be made. And we'll keep looking at this. Once again, weekly wick zone. You can see it live right here. We've got a green candle for the week. You see here we were in the wick zone, previous week's low and close. We went down to the bottom here. Right here, actually, we opened at the bottom, came out, we came back into the wick zone, shot up through. So right here, the previous week's close would be the long trigger, and we're right there at this time. And as you can see, it's already gone up about 33 pips from here. So that first time could have been a 33 pip winner. Winner, chicken dinner. Okay, it's Tuesday, so we've got 1, 2, 3 gaps left to fill. Let's see what happens rest of the week. So, not to beat a dead horse, but you can see right here, once again, looking at the wick zone, you always trade out of the zone, not into it. So right here, you can see we had a long trigger at 110.929, and we had a high 33 minus 11. There was a 22 pip chance right there to take profit today. And so once again, the long trigger's at 110.929. The short trigger would be the previous day's close, which is right around the open, 110.64. And looking at the range, 1, 2, 3, 4, 5, 6 ranges over 100. At the euro yen clocking in at 97, and the dollar yen kind of an anemic 56. And buy zone. Okay, we're going to switch gears here. The buy zone. It's always the daily open. Daily open. There it is. And then 8 to 10 pips off the daily open is your long trigger. 8 to 10 pips below is your short. You can see here you triggered in. Now, where do you stop? There's 2 places. The natural stop, which is right here, because if it triggers long, then it triggers short, then you need to get out of a long. That's a loser, right? The other one is some people say, well, if it closes below the daily open, even if it doesn't hit here, they're gonna take that loss. So it's up to you, the trader. You can either stop out a close below the daily open, or if it gets into the short zone. But so you can see here, you got trigger. There you go. Nice winner. Thing is, we didn't hit the pivot. So pivot faders, would be looking for this, but right here, if you went short at that open, you see here it went down, made a new low, but came back to this point. Take your profit, just because it's not doing what you want it to do. Price is going the opposite way. So once again, buy zone, H1 candle color, long here, short here, simple. Once again, what's the stop loss here, here? You know where the stop loss is going to be. So you come and you adjust your position size, the stop loss. So you're either going to have a 10 pip stop or 20 pip stop. Simple, simple, right? Okay, rat zone. What's the rat zone all about? Well, if you look at a daily chart, and we can look at a daily chart here, you can see that these wicks have some length to them. Well, I noticed that, so I wrote a frequency distribution indicator to tell me what those wick sizes are. And I was looking at the pound dollar at the time. It's usually bigger than 20. So you can fine tune it, but just a rule of thumb, I use 20. But to trade the rat zone, you need to have separation between the red rat zone and the green rat zone. So you see here we came in, we put in a low, but the high at that time would only be here. So you wouldn't trade it. But now you get nice separation. And so red rat, what do? What's the trigger? Well, first has to be in the rat zone. Then you can do many things. You can say, okay, green candle closes, red candle closes, short at the low of the red candle. Then you have here green, red, short at the red. Right there, you can see what happened next. And no matter what, this is the last place. This is when the ship sails. This is boarding area. This is takeoff, okay? Sailed away. You don't want to get in after this. Not if you're a rat. And on the other hand, you can see price dipped in the green zone. Didn't have a rat reversal trigger, but it started to leave the zone. So if you went long there, you'd be up about 5 pips. Just remember, this number and this number usually at the end of the day bigger than 20. And that's what you're banking on. So see here, you're up 6 pips, and there you would be up. Well, actually, that's not. This number's 20. So here you'd be up. Yeah. Well, now 7 pips, and in this case, you'd be up 10 if you were a red rat. And the thing about rats, you can only be one or the other. You can't be both, because if you're both, then you're a Yale student. So you're either a green rat or you're a red rat. Or you're a Yale student. Okay, pivot. There's the pivot. Didn't hit it. But remember, I called this out earlier in the week. The 110.94. Well, you can see here we had a high of 111 point, and that's not a hindsight. I called that out. Was it either Sunday or Monday? So I think it was Sunday, because yesterday was Monday. I believe I called this out then. Anyway, you can go watch the videos and see. So we've got a miss pivot by 2 pips. So this will probably get taken out. Maybe, maybe not. We will see. It's something to look for. So in other words, price could keep going up, but as soon as you start to see the short, this might be an area that you might think, okay, it's going to hit there. We'll use that for take profit. So that was the rat zone. That was the pivot fade trade. And just so you know, just to be clear, if it opens above the pivot, you want to look to go short. If it opens below the pivot, you look to go long. Real simple stuff. And price action trading. You use the good old 3-level ZZ semaphore that I modified immensely, even though I don't even have any of the mods turned on. Well, the one mod is it tells you what you should be trading right here. But you can see here, for the day, 1 ball at the bottom, green at the line, you go long. Now, as far as your stop loss, you could put 10 pips the other way, 5 pips the other way. That's up to you. You could even have it here. Then you just figure out your position size. When do you take profit? Well, I mean, once again, I think usually the candles tell you. So here, if you had gone long here, there was your high. It pulled back on the open. It is coming back right there. So you probably should have, once you saw that. Well, actually, the way this candle probably worked, since it's red, it probably went up here. And then you see it came back down right there. That's where you can take profit. Yeah, sometimes it might hit that and continue, but hey, you don't know. We don't have a crystal ball. All we have are these indicators, right? And our eyeballs. So we trade what we see. And at the moment, prices, market's taken away from our profit. So it's like, okay, that's enough. You can have that. Can't have any more. And you can see here, it continues. 1 at the bottom, green at the line, green at the line, 3 at the top, red at the line. You see that right there? So what's a profit? And then 1 at the bottom, green at the line, profit to be had. It's not rocket science. It really isn't. It's simple stuff. Okay, once again, trading with candle colors at the horizontal lines from the previous day's session. Not rocket science. Okay, wick zone, I've explained it again. Based on statistics on the daily wick zones, there's about a 70 to 77% chance that once price enters the zone, it will leave it. And that's not probability, that's statistics. It's dealing with things that happened in the past. Call it hairy hindsight, right? But we know, see there, it left it. That was a leave. Price didn't stay in, it came right back. Looks like it might want to go back out. But you can see here, price in and out, in and out. Now, holo. The highest open of the day and the lowest open of the day. As the day progresses, these numbers change. And in this case, you only had opportunity at the open and one opportunity there for the highest H1 open. Let me switch it over to H1 so you can see that. Highest H1 open. So right there, you can see this candle made a new high, closed, price went up, came out. So you go short at that open and you take profit when you can. It's not rocket science. When do you, where's your stop? Well, if it makes a new high or a new low, that's probably a good time to stop. And once again, you have to, you're looking at this distance. These distances are different. So you have to adjust your position size to keep your risk constant. Okay, inventory reduction bar, green that, if right here we're having a long trigger, here we had a short, another short trigger there. So, whoops, monthly. We don't want monthly. We want 15. Hit that by mistake. Once again, daily, weekly, monthly, open, high, low for the previous day, week, and month. We're just trading candle color at the line. Nothing difficult. And once again, stop loss where it makes sense. Here, just looking at the tick chart, you see we had some buying going on. Nice little run there. Einstein line. This is so simple. This is your open. That's when you looked. We just have it 2.5 pips away from when you look, which is about 2 spreads. If it goes that far, chances are it's going to continue, go further, or it's going to chop. We don't know. We just take the trade there, and you can see what happened. Winner, winner, chicken dinner. So I hope that helps answer the questions about, any of the rules. If I need to do more detail, let me know. Because remember, fellow traders, never forget, it's not what you trade, it's how you trade it. Get out there and drain the banks.